Hi, this is Jason Fielder with the Daily Forex Report for October 13th. Currently looking at the U.S. Japanese yen pair. This particular pair closed down today. It had a relatively short range from open to close and high to low as far as that goes. This pair is moving sideways with the bias that is sideways. We are currently looking for it to potentially move as high as 90.70, possibly as low as 88.80. Look for some resistance in this pair around 90.20 and look for some support around 89.33. Now switching over to the Euro USD pair, this pair closed up. It did close above prior resistance. We are looking for this pair overall, if we zoom out, to continue moving a little bit higher, and a bias that is starting to move higher as well. Look for this pair to potentially move as high as 149.54, possibly as low as 146.92. Look for some resistance around 148.75 and look for some support around 148.02. Now switching over to the pound US dollar pair. This particular pair closed up during this past session. It did test or break through prior support, but did afterwards close much higher. This pair is moving sideways with a bias that is sideways. We're currently looking for it to potentially go as high as 1.6022, possibly as low as 155.97. Look for some resistance around 159.88 and look for some support around 158.55. Now switching over to the US Swiss. This particular pair closed down. If you notice, it did break and close below previous support and then tag pretty much previous lower support before pulling back for the close. We are looking for this pair to continue moving sideways with a bias that is sideways. Looking for it to potentially move as high as 1.0338, possibly as low as 10130. Look for some resistance around 10255 and look for some support around 10192. Now, as far as news announcements goes, we have the pound releasing their jobless claim change for September at 4:30 a.m. Eastern Time tomorrow. Consensus is things have moved a little higher with their jobless claims from 24.4K to 24.5K. So not a huge impact, but definitely worth noting. Now, the U.S. has one of their top 5 news announcements tomorrow. That's being released at 8:30 a.m. Eastern Time. The advanced retail sales for September is what the news announcement is. Things have, it looks like things have headed lower from 2.7% down to negative 2.1%, which would be, of course, negative news for the U.S. dollar. We also have the FOMC meeting minutes being released at 2 p.m. Eastern Time tomorrow. And the last news announcement that we are going to keep an eye on is going to be the New Zealand Consumer Price Index report for the third quarter. It's being released at 5:45 p.m. Eastern Time. Consensus is things have moved a little bit lower from 1.9% down to 1.1%, which would be good news for the New Zealand dollar. Now, what I'd like to talk to you today about, let's zoom out on the Australian US dollar pair. If you notice, we have this super strong trend to the upside, over 2,800 pips so far. Let me move to the weekly time frame, and if you've noticed, we've definitely recovered a lot of what we lost prior to the financial debacles of the last quarter of '08. So that's just one example. Keep that one in mind. Look at the New Zealand US dollar. Similar story here. Basically, the reason I bring these two up is that we are seeing the resurgence. We have been seeing the resurgence of the carry trade. So for those of you that want to take a closer look at it, have backed out of it after being burned on this long drop, it's definitely worth noting. Now, something that if you go back in history, you can do, if you enter one of these trades on a little bit longer time frame, Basically look for the pullbacks. Originally looking to enter here. Once we have this pullback and it moves a little bit higher, you bring your stop loss to that new level. If you move higher and it pulls back, you do the same, and you just continue to follow this up. Actually, pull back a little here, so that you can lock in profit. And at this point, you'd be out, but you would gain about 500 pips between the 2 points if you do that. And if you notice, if you continually did that, had your stop loss a little bit lower, pull back, it moved higher, your stop loss would have been right about here when the downturn hit. Now, I realize that's still a significant move, but if you look at the difference, I mean, you're talking about around 1,290 pips at that point. But look at the difference between that and the full amount. The full amount would have been an additional, if you were lucky, around 2,000 pips. So that's a good way basically to track up a carry trade. Now, another interesting thing is once we did hit the bottom, and it started bouncing around here, we had this new high that was made, and then it pulled back down. Well, a good place to get into the carry trade would be right here, and as it moves higher, of course, we have a pullback and it moved higher. So here's the stop loss again. So this is a good way to lock in profits. You do have to leverage down. Make sure that your leverage is very low. But nonetheless, we have seen a return to this over the past several months. So normally they say that the bulls take the stairs and the bears jump out the window. Well, we definitely saw that, but now I think we're seeing a return, and a fairly strong one. This New Zealand US dollar pair, if you notice, it's moving up almost at the same speed at which it fell, which is really exciting and really kind of rare. Well, that about does it for today. Until next time, this is Jason Fielder. Good trading.